Welcome to the pod focusing on the aftermath and recovery from the devastating Palisades fires of January 2025. Journalist Joel Pollack, entrepreneur Oren Ezra, and technology expert Ron Goldschmidt serve up to the moment vital news and information, discuss the ongoing recovery efforts, and introduce us to the individuals and trades who are playing key roles in rebuilding our cherished communities. We're diving into the deep end and learning quickly how we can move forward together. We know the pain because we're living real-time news, stories, resources, and insights on the ongoing recovery effort. Buckle up. We're three homeless guys.
Welcome to Three Homeless Guys, the podcast about the Palisades fire and the rebuilding effort. I'm journalist Joel Pollack, here with technology expert Ron Goldschmidt and entrepreneur Oren Ezra. And we are joined this evening by our special guest, Valerie Brown of After the Fire, afterthefire.org. And Valerie, After the Fire is not a British new wave band that recorded the hit song in the 1980s, Der Kommissar, but actually is a very helpful organization. We had Jennifer Thompson on our show a couple months ago, and she's been incredibly helpful behind the scenes. And she suggested that we bring you on the show. So welcome.
Thank you for having me.
We're going to give you a more complete introduction in a moment, but first we'll go to a little bit of news. And I have some bad news and some good news. So I'll start with the bad news so we can get it out of the way. And that is some news from the state legislature. There's a bill that failed to move forward. It's called AB 1253, and it was written by Assemblymember Nick Schultz, who's a Democrat from Burbank. And what he tried to do with AB 1253 is protect property owners in the Palisades and Eaton fires from having to pay more property taxes when they or we rebuild our homes in line with new fire codes. So there are all these new fire rules that are going to apply to new construction, and they're necessary for mitigation, prevention, etc. They're required by local authorities. However, they might also increase the value of the property. So you might have to pay more to put these fire-resistant measures in effect. And we discussed sustainable construction in our last podcast. But then you might be hit with a higher assessment at some stage. So AB 1253 by Assemblymember Schultz was designed to exempt wildfire victims from having to pay higher taxes, from higher assessments. And it never made it out of the Assembly Appropriations Committee. So a lot of people are very upset about it in Southern California. This is not a partisan issue. These are Democrats complaining about what happened in the Democratic legislature. So this is maybe a regional issue. I don't know exactly why it didn't make it out of the committee, but County Assessor Jeff Prang, who you may have heard of because he's the one sending out the notices about whether your property is worth less than it used to be, he said, quote, "I am profoundly disappointed that AB 1253, authored by Assemblymember Nick Schultz, Democrat of Burbank, a common sense fire relief bill I proudly sponsored, was held in the Assembly Appropriations Committee and will not move forward this legislative session." So not good news there. Maybe there was something wrong with it. I don't know. Maybe we should have Assemblymember Schultz on the show to talk about it, but it did not make it out of committee. Maybe in the next session, who knows? But that certainly needs to happen. That's the kind of thing that needs to happen, and it's not happening yet. So we'll see where it goes. And then the good news, I was in the Palisades this week, and I went to my house and was leaving town and going through the center of town, back past the village, when I saw a crowd in front of the Palisades Village Mall. And I recognized a very well-dressed gentleman, and it was Rick Caruso. And he was there with Elise Walker. Elise Walker is that Elise Walker. She's the Elise Walker of the upscale women's fashion store, which used to be on the corner of Antioch and Swarthmore. It was a fabulous store. Certainly the window shopping was a lot of fun. A little bit on the pricey side once you went inside and looked at the cost of whatever it was you wanted to buy, but she lost her store in the fire. Everything on that side of the street burnt down. In fact, both sides of the street on Antioch. And yet she has relocated and will be relaunching as the corner tenant of the Palisades Village Mall. So a local business has replaced, I think it was Saint Laurent was there, and before that it was Amazon. So we now have a local familiar store anchoring the Palisades Village, and there you see a nice shot of Caruso and Elise Walker and Corinne Verdery, who is the CEO of Caruso's property company. So really a great occasion. I pulled over, I got out of my car. Normally they tell me about things like this, but they did not this time. So I just wandered into it and said hi to some familiar faces, some of whom you saw in those pictures. And it was great. Gave me a lot of hope. There's an investment in the future that's happening, and the store is set to open in 2026. So it's not opening yet this year, but once residents start moving back and traffic starts up again and people are able to shop in the area, that's something very exciting to check out. So that was a bit of good news and a hopeful sign for rebuilding. And I'll throw it to you guys for any news you guys want to share.
Yeah, Elise Walker, anchor tenant. Great news. Bad news for the Goldschmidt household. My wife loves that store, and we may have to reassess our future plans due to this. But no, it's a great store, a great business. I'm very glad it's going back in. I did see one interesting story that broke. The LA Times broke. It's about a couple of lawsuits, and I think it's very topical to the pod today. A couple of lawsuits that are accusing insurers uh, that they have colluded in order to force homeowners onto the California Fair Plan. So important story from the LA Times that was just released. Two lawsuits filed in LA accuse over 200 insurers, including State Farm, Farmers, Mercury, of colluding to push the wildfire-prone areas like ours into the Cal Fair Plan. So, amongst other lawsuits, this is a new one that is very interesting, certainly to a lot of holders of the fair plan or the unfair plan, as Joel says. Um, glad to talk about this a little bit later in the pod as well.
All right, Oren, you're up.
Great. Okay. So I think that like for me the news is it started on a personal level with my realization of the things you can do with the AI. And me and Ron had a meeting this morning, and after the meeting, I showed him some things that I built, and it's taking me back to we're rebuilding a city, and it's taking me back to the things that Adi said. And if we would be talking like 5 years ago, or 2 years ago, even or even a year ago, everything that like we could think of doing in terms of like either sustainability or like to protect the houses from fires and all the research, and then you need the expert and to spend like a lot of money. Today with AI, these things can be very, very, very simple. And that's taking me back to, where do we see like AI in construction? Where do we see, and again, Ron is the expert on this field, but Ron is more on the software side for construction. I'm asking, where do we see the progress of AI in actual construction? And that's a question that we started asking ourselves on January 8 in the morning. And throughout our research, we started to find out that there is not a lot, but there is some companies that started to use AI as their main way of either rebuilding or engineering or doing the architectural, and there is like very, very few companies that is actually using it for rebuilding. And we'll be very excited to introduce some of them in the next podcast. But I think that we might the disaster that happened to us might happen in a timing that is it's crazy. The things that you can do with AI today are insane. I don't see a lot of progress yet in construction, but there is some. And I think this can be a very big news item once we'll bring some of the software that we've started to look at.
And Caruso, and to be fair, Rick Caruso did secure some AI tools to start working specifically on the permitting. I think what Oren's talking about is more like the actual building construction side itself, pre-permitting. But it's a good start. I'm glad that Rick Caruso's like, has looked into this. He's 100% right that this is going to be a big boost to the rebuilding, speeding up everything and making it more efficient. So kudos to him.
Before we bring Valerie in, I have one community announcement that I was asked to make. It's a really good piece of news as well. The Palisades Charter High School, which is rounding out its academic year, managed to pull together an amazing production, The Addams Family, which was directed by Nancy Fracciola and Heather Oscarson, who works with wigs, hair, and makeup design, wanted me to know and to announce to the community that the Palisades Charter High School production won the award for Best Production at the Jerry Herman Awards a few weeks ago. And she mentioned, quote, "We lost all our inventory in the fire, so we were able to scramble to collect all new makeup, all new wardrobe, including shoes. And I personally had to build and style 22 wigs in less than 2 weeks' notice for our kids to perform at the Jerry Herman Awards." Incredible. I mean, this is a community that's really resilient despite all the challenges. But there's really no greater challenge right now, I think, on an individual level than the insurance problem. And that's one of the reasons we have Valerie here with us this evening. Among other things, she came highly recommended from Jennifer over at After the Fire, but she is herself someone who's been through the fire or the fire experience in San Diego. And she works with After the Fire, but she is also the former deputy executive director of United Policyholders, which represents consumers in the insurance industry. She has many years of experience in the nonprofit world, and she's worked with big nonprofits, small nonprofits, private, corporate, family, faith-centered, whatever, you name it. And she has a huge amount of experience, as I mentioned, in disaster recovery, not just through her nonprofit work, but also through her personal experience. And she'll talk about that, I'm sure. She was telling us a little bit about it before we started taping, and I was blown away. The fire she lived through was 10 times larger in terms of area than the Palisades fire, although fewer structures were destroyed. Just a massive fire in San Diego just over 2 decades ago. So she knows what this is like, and she's going to share her expertise with us. Valerie, welcome to Three Homeless Guys.
Thank you for having me tonight. Thank you for having me today. Would like to follow up on that AI topic and share a tool called Bevel that helps with that insurance inventory piece. It's a free tool that was created by the son of some seniors in one of your fires that he just created a tool to help with photos that not only creates that list, but actually links to the pricing. I just found it was an incredible use of AI to help people navigate the insurance claims process.
Yes,
Yeah,
that's Bevel.
we're going to
Hold
look
on, let
at.
me get this spelling.
Go ahead.
Hold on 1 second, Orrin. It's Bevel, Bevel. You can Google it,
Correct.
or there's a website, hellobuildable.com. You spell that exactly the way it sounds,
Correct.
hellobuildable.com, and that will give you the Bevel app if you haven't used it yet. Go ahead, Orrin.
No, I'm saying I really hope that more and more tools like this will come available for us because, for instance, with the State Farm, and I'm sure we're going to talk about a lot about like insurance with State Farm or with any insurance company. It's either you take somebody that's going to do all this work for you, and you're paying them anywhere between 5% to 10%, or you're going to start using these tools, these free tools that can really help you. So I'm excited to see tools like Bevel.
Yeah, and it helps with the documentation because honestly, with the insurance claims process, so much of it is documenting what you do and understanding what your policy promises and keeping track of all those pieces. Just using technology to help you navigate that, reading your policy, understanding what you have is key to being able to move forward.
So, Valerie, tell us first, before we get into the insurance picture, about your own experience in the fire that you endured in San Diego County just about 20 years ago.
Yeah, so in 2000, I moved to San Diego from the East Coast in 2000. In 2003, I was here for the Cedar Fire, and it burned around. And then 4 years later, they called it a 100-year fire. And then 4 years later, we had another 100-year fire, and my neighborhood burned. And so I ended up spending the next 3 years working to support my community in the long-term recovery space and working very heavily on insurance issues with United policyholders at that time because they were the resource that were going to help my people get home because we found, and it seems to carry through across most wildfires that I've witnessed, uh, people are significantly underinsured. A sizable portion of them are. My fire, about 75% of the people were underinsured, $250,000. That's 18 years ago. It's just, it's a lot of money for people to come up with, and there weren't a lot of resources to help fill the gaps. And so most of the work that I did in long-term recovery was helping people navigate that rebuilding process and capturing those dollars from the insurance so that they were paid out as fully as possible.
Okay, so that's a huge challenge for us here. And I'm sure each of us can tell you our sad stories. We have told our stories on other editions of the podcast, but just to summarize, I'm with State Farm, and like many homeowners in the Palisades, obviously required to have fire insurance. We've been frustrated with State Farm's services. We stuck with State Farm despite being approached about joining other insurance companies a few years ago. We actually bought more fire coverage from State Farm on the advice of a really great insurance broker last year. So that's an unusual story. You don't hear many people talking about how they had more coverage going into the fire. But we were lucky in that sense. But even though we have this great policy on paper, in practice, it's been very difficult to deal with State Farm. And I was speaking to my wife about just the problem of dealing with the alternate living expenses. I'm speaking to you from our, I think, third or fourth rental home. The people who are supposed to help you find accommodation seem to represent the landlords and not you, which is weird because you're the one paying for the coverage. So that's just one problem. And we haven't even scratched the surface of the problem with contents and remediation and repair. And we talked about this in previous weeks, how they lowball the offers. Joy Chen, who's organizing Eaton Fire,
Yes.
she talked about it. But we all have our stories. What's the big picture here? Why are the insurance companies so difficult? And why is this area of insurance apparently so much more difficult than auto insurance, life insurance? I mean, life insurance is no picnic either if you've ever had to deal with it. But this is really egregious, the way people are being treated for the most part.
Yeah, I would say it begins with that contract. When you secured your homeowner's insurance, most likely you secured it at the time of your mortgage. And so,
It's not like you saw it beforehand and understood it. And so a lot of it is just the language that's written. That legal contract they provide is very much weighted to protect their interests. When you read through, just for example, for the contents, they certainly have sold you a policy that says we've calculated how much coverage, how much personal property you would have in your home. We're going to give you a certain amount of coverage. If you want more, you have to talk to us. But they know those numbers, right? So my argument personally would be,
if you know what the average contents is across, you've sold me this policy for my house 20 years.
why would you require an inventory when you didn't require an inventory before when I bought my policy, right?
So why are you asking me to prove something that has no basis to match to? And that's just one little piece, right? And a lot of it is just geared towards
Um,
putting that onus on you to prove you have the need. And just to be frank,
it seems to be that the insurance industry model for homes, specifically the homeowners policies, are geared for partial losses.
So think a kitchen fire, flooding in a bathroom. It's not a wildfire that destroys everything and takes it down and destroys your foundation and all of this. It's just not made for that. It's made for
Incremental repairs is it what it appears to be. And so there's a disconnect between what you're buying
and what that and how it plays out in a catastrophic loss.
or, for example, for smoke remediation or a partial loss.
This is not like a kitchen fire. You've got so much higher heat and other things going on. It's not the same.
Right. So this is different because it's not a kitchen fire, but we don't
But
know.
the policy is written that way. Yeah.
My wife was telling me the really discouraging thing is to hear testimony from victims of disasters in other states and realize that they've been dealing with the same problems and they've been stuck in the same position for years. I went back and looked at an email I wrote to my mortgage lender 3 months ago about the situation, and nothing has changed substantially since then. And it's very frustrating.
Yeah.
It's like looking back at February. I mean, February already seemed to me to be a long time after the fire, and now it's obviously end of May, beginning of June, and we're talking 5 months after the fire, and very little has changed from an insurance standpoint. I am starting to feel a little bit of hope that things might move forward somewhat. I'm on my fourth adjuster, and my fourth adjuster was on vacation for a couple of weeks. He came back finally. And obviously people have to be allowed to take vacations, but we're under financial pressures that just grow with every day. And somehow they're fine taking their time, and they are not helpful. That's to put it mildly. Gentlemen, I don't know if you want to weigh in, but there's my hamster falling off the cage. I did warn you there was a rogue hamster in the room. The kid's hamster lives in
Valerie,
this bedroom.
is there where does this end up? Like, what are the throttles, or like what are the weights that folks can put on the insurance companies here, aside from like just the traditional things that they're already doing, lawsuits and such? What's in your experience been the most effective way for the individual policyholder to move forward with their claims versus their company?
The first thing is just meticulous documentation.
Every promise they've made, keep that paper trail. And a lot of times they tend to call, follow that up with an email, document your understanding, get them to reflect that back. Having that paper trail helps for if you go into litigation, if you go to the Department of Insurance for help. But that's the first step, is just doing that. A lot of times people will ask their adjuster directly. Joel said he's on his fourth adjuster. A lot of times when we make a request to an adjuster, they might not actually have the authority to do what you've requested. And ask that clarification. Is this something you can do? And if they can't expedite it, ask them to move up to management. Sometimes going higher up will work, but make sure it's something that matters for you. So, and Joel, to go back to your point about the additional living expenses and the people that are there to help you, a lot of times people end up working that in tandem with working with their own realtor who's helping them find properties, so that you're working with the insurance company provider to do that, but you're also running your own series of opportunity seeking to see if you can find that place, because
the people contracted with the insurance company don't, they might have so many clients, they're not helpful, like you said, or they're not advocating in the way that you need. And so just
sometimes you do need bringing that professional help to help you on all of these pieces. But Ron, sometimes it's just a letter from an attorney that will help move the needle.
But a lot of times people do have to get professional help. And Joel, to your point about how things haven't changed, I'll actually take you back on with United Policyholders. That's why they were founded.
After the Loma Prieta earthquake, it was State Farm specifically was changing estimates from the damage assessments and then lowballing that. And so that was the genesis of that.
It happened with the Marshall Fire in Colorado, 4 years ago at this point.
And so I'm hopeful with the work that you guys have done with Joy and in your disaster that you might be able to move that along. Having the New York Times doing that survey and paying attention, and that's progress. I know it doesn't feel like it for you, but that is progress to have somebody, focus on that at that level.
It's interesting that you mentioned that. Like one of the things that's like discouraging to me is like having been through this process, especially with State Farm, who I'm also covered by, is like you understand that some of these things are systemic. They've been
Mhm.
happening for many years, yet they continue to happen. So whatever's, I know we're not the first fire. Other fires have been impacted, or victims have been impacted in the same way. Yet there hasn't seemed to be have much impact on the executives or the powers that be at State Farm. Why do
Yeah.
you think that is?
Well, look at it this way. If they were a mortgage company doing this, they're regulated federally, right?
Insurance is regulated at the state level. Each state's insurance commissioner has varying levels of authority. And even though I've heard people make the argument, they view insurance just like your lender. They're quasi-regulatory, and there's this feeling they should be in that space, but they're not regulated in that way. And so it really is, what are the safeguards you have in your state? And for all of the frustration you have, the scary thing is that California has the best regulations to protect insurance consumers in the country. And as you're finding, it's that execution, implementation, and holding them accountable where we falter, because there are not a lot of good tools. Even if you went into mediation with them at the state level, they're not bound by that. There's short of hiring professional help or finding a way to, as Joy is doing with her effort, to shame them into doing the right thing. There's not a lot of recourse there.
Well, some of the things they do to help consumers seem to hurt us. The idea that we have this insurance commissioner who can approve price increases, premium increases, seems to have pushed some insurers out of the state. Now, that's a separate issue from whether they should be allowed to raise the prices now, given their failure to perform. And that's the whole issue around State Farm and their 17% increase, which is now becoming close to a 30% increase request. Joy Chen has been adamant that they should not be allowed to charge more until they've made their customers whole. I agree with that sentiment, even though generally I think that trying to impose these price controls has made insurance less accessible, not more. But I feel like there are very few tools to enforce compliance with the policies. It does seem like the insurance commissioner's only tool is to say yes or no to a rate increase. And there's not much else, it seems, that they can do to make sure the insurance companies are fulfilling their end of the bargain. There's no reason, for example, that I should have been offered $5,000 by one of my adjusters for the entire contents of my home that were damaged by smoke. State Farm has actually since apologized to me. The next adjuster apologized on behalf of the company, which, is interesting. It does tell you that they know that what they did was wrong, but there's no tool other than the courts, really. I mean, is there some other way that consumers can protect themselves from that kind of behavior?
So depending on what it is, you have with the California Department of Insurance, you have the right to file that request for assistance.
I've seen it used to great effect for people with very clear-cut issues. They're in violation of this, and so they're not following state law, and so that has worked. In '07, I had clients who, they ended up opening up their complete underwriting file. The Department of Insurance looked at it, and so things were resolved without having to go through a legal battle. It really just depends on what the issue is. Sometimes I found this with the CZU fire in 2020. A lot of people struggled with the adjusters in the beginning. A lot of them were from out of state. They really didn't understand. They didn't know the state law, even though they're supposed to. They didn't know, or they didn't recall it when they had to apply it. How about that? And Um,
As people shifted adjusters, they found an adjuster who worked with them very well and moved them along and helped meet their needs. So I will say if you get one of those, work with them as quickly and thoroughly as possible to get as much accomplished as you can.
But how do you make sure you keep them? I mean, you have a good adjuster and you work with them, and then a few days later you hear they're not your adjuster anymore. I mean, it's just
yeah,
it's so.
well, once I believe state law is once you hit 6 adjusters, they have to provide you a higher up point of contact that will be permanent with you for the rest of the time.
Oh, really?
Usually the adjuster will, yeah. So you have your insurance legal rights in the state of California. They're on the Department of Insurance's website. The Department of Angels has them on their website. United Policyholders have them. So there's certain things that because you're in a disaster that the obligations that they have to protect you. And again, this is where the insurance commissioners over the years have built in more protections as things have been an issue, like the right
Ron,
to buy replacement property.
Ron, did you know that 6 is the limit? I'm pretty close. I'm on number
I
4.
did not know. I did not know
It's
that. You're very close, Joe.
Yeah, I think it's 6. We will double check. Yeah, let's double check that, but I believe it's 6.
6
Um,
of one, half a
But
dozen of the other.
exactly. Yes, exactly. Um, a lot of it is just
part of that documentation, especially with the churn and the adjusters, is that
it makes you start from scratch every time you get another one, and so
what I found helpful with people is
to start with that new adjuster and outline with that documentation on the back end, you've got here's the things that have already been decided. Here's where we were in so that you keep moving, because sometimes they will try to unmake decisions that have already been settled and take you backwards because they're
Oh,
just trying to do their job as they see it, and so you have to help control that piece.
yeah,
Here's a
that's
question I have for
frustrating.
you, and I was always curious about how do the adjusters get compensated? Because I heard from one of my adjusters, and I've had a few as well, is like they're saying, "Oh, we just get paid if like your claim gets resolved." Like I am on the same side of you, which is something I don't really believe. Um, do you know like how, or is it like different? Are they just like employees? Are they just trying to like move things along? Do they get compensated on the money they save? Like, always been curious about that piece.
So I've not been in that side of the house, right?
I've only been in the nonprofit world. So, from what I understand, they can either be employees of the company or they can be contractors that are coming in to supplement. And that's what happens usually at the beginning. Actually, with Hurricane Helene, there were adjusters pulled off of that and moved out here to support that surge capacity of lots of homes to be evaluated and all of that. I have not heard what you've described. The ones who are paid that I know that are paid when you're paid would be an independent adjuster that you've hired to represent your interests.
If someone's told you that, it would be interesting to follow up with them on that because that's not
Yeah,
that's not in my world.
One of the State Farm adjusters told me that, and I was like, I don't really buy that. I don't think that's true. And they said they told me,
well,
no, I
especially if
get
they
paid.
leave,
Yeah, and they left. Yeah, so they're not my adjuster anymore.
right?
And it wasn't an external adjuster like from that was brought in initially.
Yeah.
Um, so yeah, like I just don't understand the system. As the famous saying goes, show me the incentives and I'll show you what's going to happen. It's like, I'm really curious to see what the incentives are because it seems to be that the incentive is really just to drag things out as long as possible. And I'm just curious, like if that's an industry wide or is it just State Farm or others? Because there are
Uh,
insurance companies that have solved their cases, like, and I can highlight one, Chubb, I know is like everybody that's a Chubb customer has been delighted. They're like, my claim's been paid and no problems, no issues. Yay, Chubb. And that's just not been the experience with a lot of
well,
folks.
it's the contract, right? It's that legal agreement for your insurance policy and all of that language. It's also the claims handling culture, right? And that's what you're noticing is that there is a difference. I have a different insurance company than either of those. Sometimes they're easy to work with on certain things. Sometimes they're very by the book. They're not flexible with me, and it really depends on what it is and what that value assigned to it is. And so one, for example, and you're not here yet, but one of the big hurdles people face a little further down in the process is once you start the building process, you're looking at building code upgrades and how do you get those dollars, right? And some insurers, it's really simple. It's just you give them your contract and they're just going to give you that as you move. Others they're going to request that you have a breakdown of what the building codes were at the house at the time you bought it, any improvements you did, and then what the building code is now. And they want your contractor or somebody to break that into a dollar value so they can pay you. It really doesn't matter. It's just part of the pot of money you have, right? And your contractor's saying, I'm building a house, I'm not going to give you this, right? Because they don't know how to break it out. It makes it more complicated.
Can you comment on just like another very tactical issue, which is like some policies will pay out, yeah, and I believe it's in California statute that they have to pay out even if you have to move, you've decided to move to another property, or like you're deciding to rebuild in another lot, or you're deciding to buy
Yeah.
another property. Can you comment about that? Because I've been asked that a few times and I don't know the exact answer.
Yeah, I find it interesting. So after the 2003 fire, insurance companies did not want to let people buy a replacement property. And they were subtracting, there was just an issue with collecting the dollars you had. So in '07, we had that right. By 2010, it had kind of withered away because the insurance companies retooled their policies it made it more cumbersome. There was I believe it was the Tubbs fire after the North Bay fires. Big push. They were not supposed to, weren't supposed to lose land value on that. They couldn't subtract the land value from your policy because the policy is to replace your home, not, and if you're buying a replacement home, it shouldn't matter. But by 2020, it was problematic again. So the legislature has tackled it yet again. It seems to be fairly straightforward at this time on what it looks like, and that you have the right to buy the replacement home. You could technically buy replacement homes. It's not necessarily one, but you're limited to what you've got. And let me pull up your rights specifically because so that post-disaster insurance claims rules in California, right? So you've got the replacement home. The statute is 2051.5C2. And so it gives you the right to replace it by rebuilding or buying nearby or elsewhere without leaving them on the table, right? So you're not leaving any funds on the table. You also have the right to, it's kind of take all of those coverage that are related to that. I'm not saying it very well, but it's that building code upgrades, those things are allowable to you. They're not allowed to subtract that land value if you're buying a replacement home.
So if you're buying another home, how would you even like allot the building code upgrades if you're buying an existing home somewhere else? How do you do a like a
it's
lot?
you're replacing the home. Those
Right.
funds are available to you. And so it's complicated. I would say for that, the Department of Insurance has a really good spread on what that looks like. And Joel, I can provide that to you, that link to share.
Awesome. Yeah, no, I know it's like something that folks are considering, and they're always in this space where like they feel like they have to rebuild in order to gain the maximum amount of funds and like basically hit their policy limits for what they're gonna get. But that option is open to them, which is like replacing their property with an entirely different situation than the one they have.
Right. And people do it. Part of it's just, it's it's complicated to figure out how to do it, right? And so that's where you want to lay out with your adjuster or their supervisor, what is the process? Like if I'm going to buy a replacement home,
Do you want what does it take to release the funds?
right? Is it
How does that work, and how what funds are available, and just making sure they understand what that is, what that looks like.
and some of them are very easy to work with on this part, others are not. And one of the
Yeah.
things that trips people up on this is if you're underinsured, especially, you're trying to figure out, can I afford to rebuild, or should I buy, right? Or should I buy elsewhere or build elsewhere? And you're running those processes in tandem. right? And you
Correct.
just need to be documenting that. I'm working with a realtor here to see what my options are, talking to builders, talking to the building department about permits. I'm talking to an architect. That's part of your documentation that you're making progress. Because that additional living expense is tied to I'm working on working on this. You can't sit
For 2 years and then say, now I'm going to start working on this. Even though you might be overwhelmed, you do need to be making that incremental progress.
Right. Right. So basically, the if I had insurance and I decide not to rebuild, I just want to keep my lot, I'm able to take money from my insurance. But if I'm taking money from my insurance, most of people like me, like Ron, like Joel, we have mortgage, right? So the mortgage company is taking whatever we can take. So we cannot really replace unless we're selling the lot and paying back our mortgage.
Well, depends on what you're wanting to do, right? So when you're looking at that,
I'm going to be blunt, especially if you're underinsured. Most people take their contents money and
put it into their rebuild.
people will take an SBA loan and do that.
Some banks will do
A bridge loan that will cover you while you're waiting to sell that lot, right? Because you may not want to sell right now, but you may be looking at that. So it depends on what you're trying to replace and where you're trying to replace it and how much funds you have. So
the reality of, if you have a mortgage and you're heavily on, it's a new mortgage,
it might behoove you to rebuild that home and then sell it when you're done and buy something else, right? Put your dollars into that and then
Rent.
financially
Yeah.
dig yourself out of that hole. And that's what some people, I've seen people do that in multiple disasters over the last 15 years. It's an option because of the financially how you're strained, looking at what's the best path. And so for that, there's a great resource with Fannie Mae. It's called HERE, the number 2 HELP. And they have HUD trained financial counselors that can help on both mortgage issues, financial decision making. Honestly, even if you've run up, whether you're a renter or an owner, they can help with any of these financial crises you might be facing because of the disaster. And so it's free. They'll work with you for 18 months. It's a great resource. So highly recommend that, just to have somebody who understands mortgage issues, the financial decision making you're going through post disaster, and how to help you balance that. The other option, of course, is working with like a certified financial planner.
Mm-hmm.
So let me ask you this about the destination we're all going to with our insurance providers. I mean, everybody wants to be able to be made whole in some way, whether that's buying a house somewhere else, moving on, or rebuilding. And we've mentioned this many times. The cost of rebuilding is high, much higher than insurance companies are willing to cover right now. I mean, we've all laughed at the State Farm estimates of $290 per square foot to rebuild. I mean, everybody laughs. I don't even know why they bother offering that, but there are all kinds of stories like that. But what we want is to be able to rebuild. You had a house, you lost a house, you paid insurance on that house, and you want to be able to come back to that house or something like it. But construction costs are high. The only people I've spoken to who are satisfied with their insurance policy are either people who had little niche companies. Ron, you mentioned Chubb. I mean, I think Chubb has a very small number of clients in the Palisades, and
Correct.
State Farm is way overexposed. Yeah, is that right? I mean, it's
Yeah,
small.
it's the smaller companies that have generally, not in all cases, like the smaller amount of policy, they just basically choose to pay them out and move on, and they don't
Right.
need the bad publicity and all that stuff. Like, and it's the ones that have been largely exposed that are the most difficult.
Right. So these niche companies, niche relative to the Palisades, they might be very big elsewhere, but in terms of our community, the niche companies have made people happy. And then I have a neighbor who's very happy with State Farm, but he seems to have very low expectations. I mean, he said State Farm has been great. They've paid for my hotel for the last 4 months. I'm like, oh, great.
Well,
I mean,
you might not be looking at rebuilding yet, right? And so that reality hasn't hit.
I will say
The biggest shock to me, and even though it's state law and it's on our, when we get our declarations renewal for the policy, I didn't know what that number meant that they gave you that said, oh, you have this much to rebuild your house. I had no idea what that meant
in terms of hiring somebody to rebuild a house. I thought it looked like an awful lot of money. It was more than my mortgage.
I thought I was in good shape, right?
And then you're talking about finding that building cost and figuring out
What that looks like.
what it actually costs to rebuild. It's incredibly shocking to the system to see that. I will say, just be aware of the prices you're hearing now may decrease in the future. A lot of it depends on the builder that you're picking, the finishes and fixtures you're doing,
How you move it along. Are you looking at a production builder? Are you doing semi-custom? Are you going to use like Foothills, the catalog, the plans for free? What are you using and how are you doing it? I had friends who rebuilt. They were both architects. They wanted to design a lovely house. They were underinsured about $300,000.
and so they built the house frame of their dreams, and then they put in IKEA cabinets with Formica countertops because they could not afford $100,000 kitchen. They put in, $80 toilets instead of what they had before, right? And so they figured out how to shrink that cost down. But they had this lovely 2.5-story set of doors that were huge glass that opened into their backyard so they could have this indoor outdoor space. So they made it what they wanted it to be. And their philosophy was, we're going to work with what we have. They did max. They got every penny out of their policy, right? Because that's the other thing, Joel, you didn't say is, the idea that you get an estimate, but it shows that you've still got money left in your policy, right? Because it's usually under what you get back, usually is under your policy limits. So it looks like you're leaving money on the table. You can get that as when you have a contract and you move it forward, but you are limited to the amount on your policy with your extended replacement coverage and building code upgrades and all that. So they pulled all the dollars in, but then they figured their plan was as we move forward financially, we're back home.
We will upgrade and replace things when we need to.
They just wanted to get home and get it done and not incur any more debt. And so sometimes people are in that decision loop, right? You look at what do you have and how do you make it work.
How long from the moment that you have like a contract and you give it to the insurance, they need to give you the money? Because I have a contract, let's say I want to build my house. I'm still not sure how much money I'm going to get from the insurance. In order to move forward with the contract, I need to know how much money I'm getting. I'm not going to tell the contractor, okay, let's start building. I know the house is going to get to be $1.5 million, and I'm just going to end up getting $1 million from the insurance. I'm short $500,000. How does it work? How are you like, the chicken
So
and the egg?
it's your policy. So you're looking at your policy.
United Policyholders are a really good tool on their website that a CPA from the Woolsey Fire created. And it's basically you take your policy, you plug in all your numbers, you do your math, right? How much do they actually owe you and where are you going to bring all these dollars in from?
So pretend your policy is $1 million. you have a 25% extended replacement coverage on it. That means you have another $250,000 that if you exceed your policy limits, that would be available to you. If your building code upgrade to your law ordinance and law building code coverage, if that's another 25%, that's your 1.5 million. But you had to do the math on your policy to know what that is. And so again, going back to if they provided you a scope of loss, that scope of loss might only be, they say it's going to cost you $980,000 to rebuild. Your policy is $1 million. They think you have 200,000 spare, right, or whatever the math is, right? I dropped to zero, I'm sure. But they're saying you have enough insurance that you're not going to trigger that. When you come in with your contract, you're saying this is what it's going to be. That should trigger that you are able to reach that extended replacement coverage and add that a dollar amount on. And then for your building code upgrades, you're going to, usually they do that as you incur the cost, because that's used the typical language in the policy. But here's your level set, right? Everything on your dwelling coverage is going to be held by your mortgage company. And then what's over that, your insurance company is going to give you, and both of them are going to do it in draws. So even if you have the 1.5 million queued up and ready for you, it's not going to come necessarily in the same sequence as your builder needs the draws, because what your mortgage company calls 50% complete does not line up with what your builder says it is for their draw, or your insurance company. The only state that has that requirement that they align is Colorado, because after the Marshall Fire, that was one of the big pain points for people. So now that is state law there. It's not our law yet. I'd love to see it here, but that's a wrinkle that's not coming in, which is why so many people if they have an SBA loan, they'll use it for that gap coverage and to fill those gaps and move it along. But a lot of people use their contents because that's the only unrestricted funding that you have available to you to cover those gaps as you swing along and fill it in.
Interesting. Okay. So basically having a contract, providing the contract, and trying to get everything from that point after that for like the increased insurance that we have. That will be the route, right?
Yes, but be aware, if you come in with the your builder's estimate is that it's going to cost the 1.5 million, and your policy limit is 1.4. They're only going to give you, with all your coverages, they're only going to give you the 1.4.
Right, of course.
Right.
Yeah.
But on the other side, if he builds it for 1.35 and you came in with an estimate at 1.5, they're going to give you the 1.35, right? As long as it's under your policy limits, your collected coverages.
Gotcha.
I know it's aggravating. It doesn't make sense a lot of times.
I mean, how often do people come to the end of this process and say, it was a tough fight, but I feel good about what my insurance company helped me do, and I'm in a better place? How often do people feel that way?
I would suggest you look at the United Policyholders surveys at that 2 and 3 year mark to see how many people were satisfied with their insurance claims. I don't remember
can you
the
give
stats.
us a clue? Give us a clue. No, I mean, is it?
I would say it's less than you would like it to be. How about that?
Well, I'd like it to be 100%. So obviously, yeah.
Yes. Well, I mean, even less than that. But I think for a lot of people, they're just happy to close the book on the process, because it is a very complicated process with multiple things that you're juggling, right? Because none of you signed up to be a remediation specialist, insurance specialist, financial planner, all of these, construction person. None of you signed up to do any of these things. I've only known one person who was excited to have to rebuild their home. And I've worked
it can be exciting if
fires.
There are some people I've met who are excited to rebuild because they were planning to knock their existing homes down and rebuild them anyway. I have neighbors who had pulled all the permits and then the fire happened. I mean, obviously they're not
So they
happy
had
that
plans,
happened.
yeah.
They
Right.
lost everything in the house, so that's not good. But they know that the demolition part is actually taken care of, so they're like, okay, well,
It's done, yeah, yeah.
and we get to
But
live somewhere for
Most of
free
us
for
buy a
2
home.
years. Right. They were wondering how they
well,
were going to
how many
build
houses?
and live somewhere, and now it sort of solved that problem. But
It does,
um,
yeah. But those are
Relatively few and far between.
most
right.
of us were quite happy with our homes.
We wanted to be in our homes. We want our stuff.
I mean, our dream was to renovate the kitchen and add a room above the garage when we had the money to do it. So I wouldn't even say we were satisfied with the house. There was a lot about our house we were dissatisfied about. It's a wonderful house, but like many houses in our area of Palisades, it was a 2-bedroom bungalow that had lots of things added onto it over the decades, somehow not always
Right.
the right configuration. So it's I mean, there's some great things about it. It's got an incredible location, but we want to add a room, we want to change the way the previous owner set up the kitchen. We're not going to be able to do that for a long time now because the challenges just hanging on to this home are going to be immense.
Right.
I mean, we have the insurance covering the ALE, which is great, sort of, except that the company we have to use to make the arrangements on our behalf is not really on our behalf. And we have to go like kids to their parents for allowance every couple of months and ask them for the rent again. And it's annoying. But also just
That I would ask for I would ask to find your own place and not deal with them if that's a problem. You're within bounds to do then.
it's good to know. I mean, I'm going to talk to my wife about that because it's frustrating. And all we've done
They
is
can't
try
require
to.
you to use someone.
Right. Well, let me put it another way. You mentioned getting the full value of your policy, and people don't want to leave money on the table. I mean, from my perspective, it's never been about getting or extracting the full value of the policy. We bought more contents coverage last year, and having itemized the things in our house now, we probably bought more coverage than we needed. So, what am I supposed to do with the remaining part of that coverage? I'm not going to tell the insurance company that my plastic cutlery that I threw away is a collector's item. $50 a piece. Each plastic fork was so precious. I mean,
No.
you know,
You're going to report accurately what you had.
right. And I'm just saying, all I want to do is move forward, and somehow they make it so
Right.
hard. I'm not trying to extract money from them. I'm trying to stay financially
No,
afloat, which is important. And I haven't done the forbearance on the mortgage and everything. We've tried to do the best we can, but we have had to make some adjustments in our life, and not all of them are going to be covered by insurance. So we need the insurance to come through for the things it's supposed to cover, and it's not
Right.
happening yet. And they seem to think that this is, they can just walk away paying a small percentage of what we think needs doing. We're not even asking them for the full value of the policy. We're asking them for what we think is reasonable to
Right.
restore the house. I'm not asking them to
Well,
remodel my
it's
kitchen or give me a jacuzzi in the guest bathroom or something. I mean, it's really not, it's not excessive or even ambitious. It's just restorative. That's it.
it's what
it's what needs to be done. It's restoring you back to a safe and sanitary home.
Safe and
Valerie,
sanitary.
as we are closely running out of time, I know you've been very generous with time. I just have a question for you about the day after, like the rebuild happens, and about what you think is going to happen with the insurance companies and the insurance landscape of our areas. Because quite frankly, a lot of these companies, they don't even want to be doing business here anymore. They feel the risks are too high. They feel the government is dragging its feet on things like brush clearance, and basically the risks are too high for the policies that are being paid. And so what happens, a few years down the road, what have you seen happen in these areas which are very fire prone and which may be dragging their feet in terms of like fire resiliency and the codes that they're building up to. What is going to be the insurance landscape in a few years for these companies? Will we be even able to get insurance anymore?
I what I will say on the insurance affordability and availability issue is that we have been making progress as a state. You have CAL FIRE, you have the Department of Insurance, and you have the insurance company's own Institute for Research, IBHS. They all have the same set of standards that an existing home would need to do to get those insurance discounts and get the availability for something that's not the FAIR plan, right? So the standards are there. They're becoming socialized. You've got different counties that are offering like bond initiatives to do the work. Everybody is thinking outside of the box. And I would say for everything I've seen happening in LA County, they're building that into making sure that when everybody is home, that you are, the hope is that LA is the model for this, right? I will be blunt here. I've seen, like, I have a relative who was in Altadena who smoke damage but did not lose his home. I saw his insurance, what he was paying for his premium, and my jaw dropped. You guys tended to have lower policies per se than I expected. And San Diego, I know, is an outlier. We have a fire every 2 to 4 years. So our rates tend to be higher because, we have more visible risk. But rates are going to go up. And so the way to combat those rates going up is going to be you're paying what that rate is for the suitable, commensurate with the risk. But you might do what I do. My deductible is $10,000. I'm not going in for a water leak. I'm not going in for anything unless it's major. Because for me, I'm insured to value for rebuilding my home if a wildfire hit, and the other stuff I'll figure out how to handle 10,000 and under. I don't care, but I want to know that I'm fully covered, right? And so I think there's a lot of progress happening here, but everybody's going to have to do their part, right? It's the insurers are going to have to recognize and reward people and communities for doing the work. Jurisdictions are going to have to do their part. My fire burned into my neighborhood because the water department had not done their mitigation work for trees and Mexican fan palms for I don't know how many years. We had 60 years of chaparral growth that burned to nothing and burned, as it burned in the neighborhoods because some endangered animal lived there, and so it was complicated to do the brush mitigation. And so, there has to be some balancing done here to be able to protect us to live where we live and protect the real estate market and our investments and protect our families and our homes and our communities. But I think we're making that progress. And I think everybody's on the side of doing that. There's Resilient LA, you've got Steadfast, you've got all these groups talking about this. The Urban Land Institute has done their recommendations. Governments are paying attention. All of the groups seem to be working. And I will say some insurance companies are paying attention to this and they want to be part of the solution. So I find hope in this, but it's still very frustrating and it's a very scary time for all of us.
Well, Valerie Brown from afterthefire.org and former Deputy Director of United Policyholders, thanks so much for your time and your insights on Three Homeless Guys. And if you want to follow all of our episodes, you can find them on threehomelessguys.com. Our YouTube channel is also Three Homeless Guys. Please like and subscribe there. And you can reach us at pod@threehomelessguys.com. Until next time, for Ron, Oren, and myself, Joel, stay strong.
Thank you,
Thanks.
everybody.
Just make sure you're all uploaded.
Thanks for listening to Three Homeless Guys. If this episode hit home, please subscribe to our channel. Check out 3homelessguys.com for RSS feeds to your favorite streaming service. Follow us on social and share this with a friend who needs to hear it. Drop us a review or shoot us a message at pod@3homelessguys.com. We'd love to hear from you. Stay strong, and we'll catch you next time.